Ladies and gentlemen, thank you so much for joining me. And my name is Aaron Dehart, and I wanted to make a presentation that's very easy to understand on what it is like to go through the home loan experience when you're either buying a house or you're going through a refinance. And I wanted to make this so it's easy to understand, easy to follow, and just answer the majority of questions that I see that come through on pretty much every type of loan transaction that we do here. And so I created this guide that's free. There's nothing to sell here. I like to do really good transparency. And I think, buying a home, it is tough. It's a rite of passage. And I wanted to be able to make an educational presentation that's easy to follow, but also set proper expectations. And I think the easiest way to do that nowadays is through proper education and preparation. The more prepared you are, the more educated you are when you start the journey, it's going to be a lot more of a simple process because you're going to know what to expect and you're going to know what the proper expectations of not only us as the lender but also you as the client. And again, the more preparation, the more education we have with that, the more smooth it's going to be. And it can even be an enjoyable experience. Is obtaining a home loan the easiest thing in the world? Is buying a home the easiest thing in the world? No, it's not. But with some proper tools on your side and the right team, it can actually be an enjoyable experience, and it's going to be a lot less stressful for you. So let's get right into it here. And I want to take a second and just kind of take you through the whole timeline from A to Z on what to expect when you are going through the home loan experience. So first and foremost, a little bit about me. My name is Aaron DeHart, and I've been a mortgage loan officer since 2003. I absolutely love it. My specialty is what's called government loans. So a lot of FHA, a lot of VA home loans. That's probably about 70% of my business, but we do all types of loans. I have a wonderful, 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 amazing team behind me. There's no way we could do what we do and help as many home buyers that we help every single year without having a phenomenal team behind me. So first and foremost, my kudos and thanks to them. So literally at the time of this recording, it's coming up on 21 years of me being able to do this. And over that time, we've helped a little bit over 3,300 families either get into a home or save money through a strategic refinance with that. And that's something we're going to go through as well here. But again, my specialties are include but not limited to FHA government and VA loans, first time home buyers, Fannie Mae and Freddie Mac conventional loans, 100% financing and other types of down payment assistance that are out there. And we'll get into that as well. So real quick, these are my two children, Cameron and Bella. I've been married here to my wife, Kim, for several years now. And again, we have two children, Cameron and Bella. My hobbies that I like to fly airplanes. I love playing guitar. I've been playing guitar since I was about 5 years old. My goal is to try and be as good as my idol, Eddie Van Halen. That will never happen. There's only one Eddie. May he rest in peace. But I love going to live concerts and sporting events. And I also love to cook as well. So that's just a little bit of background about me. So, real quick here, I think one of the biggest things that people miss when they're going through the home loan process is it's a two-way street. And what I mean by that is we provide total transparency with who we work with, and we're going to work really hard for you. Make it an experience that's pleasurable, try to eliminate as much headaches as possible. But unable to do that, we need the same from you. So what that means is helping with documentation, keeping communication lines open. Don't go dark on us. If you're planning any vacations or things like that, we need to know that stuff because we're going to need things from you throughout the process. So, when we say we need something from you, do your best to get it to us within 24 to 48 hours. That's key with that to stay on potential timelines. So real quick, I always like to tell people, hey, it's very important to make sure that you're working with a lender that has a good reputation. We actually have a 5.0 review on Google. And at the time of this recording, I believe we have around 75 or so, 72 to 75 total Google reviews with a 5-star rating. So again, our big thing is communication and really taking a little more time up front to make sure that we're setting the proper expectations for you and how we do things. So the big three promises we're going to make is one, communication. So we proactively communicate every Tuesday and Friday, whether it's myself or someone on the team. Even if there's not a big update, it's just like, hey, here's where we're at. Here's what to expect next. Guarantee is I'm very big on client care in the industry, and the reason why is we run our business 100% on referrals and repeat clients. I'm very big on making sure that the numbers we do for you up front are going to match your initial disclosures, or I personally will pay the difference. And then again, on-time closing guarantee. We close on time every time. And again, that's through preparation, proper expectations. Please note, this does not take into account third-party delays. Unfortunately, sometimes, every single once in a while with certain loans, there are some things that we can't control, and we'll cover that as well and go into that as well with that. So items that are necessary to process your loan. A lot of these things, if you're seeing this for the first time or you've never went through this process, I'm just going to take you through this real quick with that. So pay stubs, we need, however you're paid, we need to be able to show the most recent 1 month period. This has to be from payroll or computer generated, and it has to have your year-to-date earnings on there with any types of deductions as well. If you are a W-2 employee, we're going to need your W-2s for the past 2 years. Now, if you've had different jobs, that's okay. We need the total W-2s from the last 2 years. So if you just moved over to a new company, say 6 months ago, we're going to need the W-2s for that most recent year, the 2 W-2s from that, and then the W-2 prior. So any and all W-2s for all of your employers for the last 2 years. So your personal tax returns for the most recent 2 years, all pages and all schedules, please. So even though we have your W-2s, we need your tax returns as well for the last 2 years. And those are two separate things. A photocopy of a valid U.S. picture ID. This could be your driver's license. This could be a military ID. A copy of your passport photo is also acceptable as well. All checking and savings account bank statements for the most recent 2 months. And here's something big. We need all pages of those. So even if the last page says this page intentionally left blank and that's all that's on it, we need that as well. Save yourself a little bit of headache. Just do it right the first time. Get us all pages of your checking and savings accounts up front, and that'll save you a lot of headaches. If you're going to use any type of asset account statements, whether it's a IRA, Roth IRA, 401k, any types of investment accounts or mutual funds for the most recent 2 months, we use those as well. And then if you are currently renting, or you are currently a homeowner, we're going to need a copy of your most recent mortgage statement. And also a lot of times we're going to need your current lease agreement just to show you what you've been paying in rent. Now, sometimes these are going to apply to you. Sometimes they're not. So if you've had any type of bankruptcy, within the last few years, we're going to need all the pages and the discharge paperwork for your bankruptcy. If you are currently divorced or you have to pay child support, or you're paying any type of alimony, we're going to need a copy of that divorce decree. Or if you're also receiving it, if you're receiving alimony or child support, we're going to need a copy of the divorce decree as well to show that. If you're self-employed, we're going to need not only your personal tax returns, but also your business tax returns for the most recent 2 years and all schedules for that. What I find easiest with that is just give us permission to contact your CPA, and we'll take care of the rest for you. And we can let the CPA know exactly what we need, what those look like. Also, if you're self-employed, a CPA letter documenting minimum 2 years of self-employment with the positive continued outlook of business and then also a business license for the most recent 2 years. So those are just some extra things that we might need. They're not going to be applicable to everything. And all those things, guys, can be uploaded very easily right directly to the portal that we use for your online loan application as well. So let's talk about some proper expectations here, and why a lot of times the media or we see certain marketing just doesn't do a really good job explaining things and why we need things. So I want to take a second and explain that. So this is why it's so hard to get a home loan now. It's not impossible. It's just a little bit of elbow grease. And again, the more we know up front, the more educated and prepared we are, the less of a headache it's going to be. So I completely understand it can be frustrating. The amount of documents, the details of the documents requested, the back and forth. Hey, we need this, we need that, et cetera, et cetera. The signing of so many disclosures. And here's why. So literally back starting around 2004, the government opened it up and they basically said, hey, everybody should be a homeowner. And unfortunately, not everybody's mature enough to be a homeowner. So they really loosened the guidelines. They made it pretty simplistic where basically anybody could get a home loan. And right around 2008 to the period of 2010, we started to see the collapse. And if you haven't seen it yet, one movie that I highly recommend everybody watches is a movie called The Big Short. And it really explains in this very simplistic ways of why we have to gather the documentation that we have to gather now. So the financial crisis that ensued from that and the collapse that occurred from 2008 to 2010 was basically like, hey, we want to make sure if we're loaning someone, remember you're borrowing hundreds of thousands of dollars with that. And one of the best analogies I always use to make someone understand is, hey, if you had millions and millions of dollars and you could lend it out and you needed to lend out, someone wanted to borrow 300, 400, $500,000 from you, you want to ask yourself, okay, am I going to lend this person money? And can they prove that they have the ability to repay me? So I want to make sure that they can prove they can repay me by proving how much money they earn, how much money they have in the bank, etc. And that's when we saw the home prices drop approximately 34%. We saw the stock market crash in September 2008. And, Obama was elected during that time. His number one job was the economy, excuse me. And he ended up inheriting, one of the worst economies since the Great Depression. And so they came in and basically reformed Wall Street reform, large banks, mortgage and real estate industries. And now we have basically kind of an over-regulation of the mortgage industry. So when you get frustrated and you want to just kind of jump off that ledge into the water during the process, just remember that we have to document everything. And a lot of times we have to get third-party presentations, or excuse me, third-party requirements with that as well that help support that documentation. And then in 2010, the Dodd-Frank Act and the Consumer Protection Act was passed. And this was the greatest legislation law since the 1930s. That this law placed strict restrictions on banks to protect the consumer with that. So here's some financial benefits I wanted to go over of owning a home. And this is example that's based on a $350,000 purchase price. So let's just say you're putting a down payment of 30,000 down, and our loan amount is going to be $320,000, and we're going to be paying 19,200 in interest. In this example, the property taxes are 43.75 for a year, and we're in the 30% tax rate. That's going to give you a monthly savings of $590. So we have forced savings every single month. And it just goes to show you why so much wealth in our country has been built through home ownership. And this is just using a nice, easy 3% average of appreciation. So in 1 year, if we just had this same $350,000 home appreciate at 3%, we're going to see a 10,500 a year gain or $875 a month of equity and positive wealth building for you being built. This is not including the eventual decrease in your overall loan balance as well. And again, guys, this is just for illustration purposes only, just to give you kind of a basic idea of what it looks like with that. So what's the return of investment of buying a home in any market? So let's just take an example here of a $500,000 house. We're using an FHA loan in this example, 3.5% down. Closing cost are 9,000. So our initial total investment, this is if everything came from you, is 26,500. So if we use an appreciation rate of 4%, and for this, I just picked a city. I used Seattle. So the average appreciation rate for Seattle over the last 30 years has been 9%. So 4% a year over 5 years equals 20% total. So in just 5 years, in this example, you've gained $100,000 in equity. So the house went from 500,000 to 600,000 in 5 years. And during that time, without throwing any extra money on any type of reduction, the mortgage was paid down to 450. So you've now got $150,000 in equity in just 5 years. And the IRS tax savings refund over 5 years is approximately 36,000 plus. So let's take a look at how the benefits and savings look at that. And again, a conservative appreciation, 4% a year for 5 years. This basically makes you have a forced savings account. So you paid down the mortgage by $50,000. And again, you've got the IRS tax benefits with that as well. So a 277% return on your investment over 5 years. So here's some big things you want to go over in your mortgage planning meeting. And this is how we do it, guys. And one of the reasons I created this is I almost think of it like, going to the doctor. Whenever you go to the doctor, they always do the same thing. Doesn't matter how many times you've been to that doctor. Some of the first things they do is they take your temperature, they take your blood pressure, they make you get on a scale, and they check your weight. This is some of the same things here. We want to get an initial idea of what your temperature is. Make sure you understand what your budget is, what your comfort level is, and so that we can really do that. So we're going to take you through every single aspect of this: the home shopping, the offer, the negotiations, how to get your offer accepted, what are the possible inspections you want to look for, what the appraisal is, how the appraisal works. When you get in a contract, we want to do a rate lock strategy. We're going to discuss what your federal disclosures are and how those work. Locking in your interest rate, your final disclosures, a pre-closing review, and then eventually signing at escrow, funding your loan, closing on the home, and getting your keys. And so here's some things you want to think about up front when you're getting ready to get into that process. Do you have an insurance agent? Do you have a financial planner? Do you have a real estate agent? These are things that we're going to need your help with in order to do that. Those are all necessary and important with that. So your financing strategy matters more than ever. So here's my 5 big tips on getting your offer accepted in a competitive market. And here's the thing, guys, the market's going to continue to be competitive for years to come. We have a huge supply versus demand problem right now. I literally get asked several times a week, Aaron, do you think the market's going to crash? I've been hearing that for the last 5 years. It's not going to crash. It's simple supply versus demand economics. We don't have enough homes that are being built to keep up with the demand and the increase in population for years to come. So it just goes to show you why real estate is such a great investment when you're getting into it. So again, reputation matters. You want to check references, Zillow, Yelp, Google. One of the things that we do is what's called a pre-offer intro call and a personal video to the seller and listing agent. So I always encourage, hey, let me know who the listing agent. One, there's a good chance I might know them. And two, we want to have a conversation with them, letting them know that we've done our due diligence. You've done your homework. We've done our homework. We've really made sure that you're fully qualified for the type of mortgage that we're doing. We'll do a fully credit, income, and asset underwritten approval for you, meaning we'll actually package your file together, present it to the underwriter, and we're going to go over more of that here soon, who the underwriter is, and actually get a loan approval done for you, minus an appraisal and other required documents that we might need for that specific property. You want to remove as many contingencies as possible. Again, you want to prepare. Knowledge is power. One thing I encourage people to do is, if you want to get your offer accepted and it's a competitive market, is up your earnest money deposit, which is your good faith money deposit. And you want to be able to have the ability to do a quick close, the ability to close in 21 days or less. So here real quick, I'm just going to take you through a quick little loan process mortgage timeline. So one of the first things we're doing is, we're applying for the home loan. So how we work is we're going to have an initial call with you, about 5 or 10 minutes, take some quick notes. It's either going to be myself or someone else on my team. Get an idea of what your budget is, what types of loans you might qualify. From there, we're going to send you to what's called a client questionnaire. It takes about 10 minutes to fill out. It's going to allow us to import your information in there. And it also allows you to update your required documentation. My team and I do a thorough review of all of your documentation. We make sure we have your income properly figured out. We know what your debt to income ratio is, what you can afford, and we're making sure we're tailoring that to fit within your budget. From there, we're going to do what's called a loan pre-approval. The pre-approval letter is going to be sent to you and your real estate agent. From there, I like to schedule, depending on if it's your first time doing this or you've been through it several times and you're a past client of mine, we're going to schedule anywhere from a quick 15-minute to as much as an hour-long meeting if you need to, because I want to make sure we answer all of your questions. You understand the entire process and you understand what the proper expectations are. So you get to go on the fun part now. You get to go and actually do home shopping, look for homes. You find your perfect home and you make an offer on that property. Once you get your offer accepted, the seller's agreeing to remove that home from the market. And from there, that's when you're going to get your home inspections done. Certain types of loans might require what's called a pest inspection or a termite inspection. And once we're in contract, we want to have a rate lock strategy where I'm actually going to do a presentation for you, present a few different options for you to look at in regards to locking your interest rate and what's best for you. Once we have your interest rate locked, and everything looks good on the home inspection, we've now got the appraisal ordered. So the appraisal gets ordered. Now, this is something that is typically an upfront cost, and here's why. Appraisals do not work for lenders. They do not work for the real estate agent. They are an independent third party, and they're doing their work up front before you're getting to closing. So the majority of appraisers are going to require that they are paid upfront. They're doing their work upfront. So that's just something to be aware of. Typically, that cost is going to be between $600 and $800. One of the first things you want to do that's your homework is get your homeowner's insurance dialed in. If you need a referral, that's something we can help you with, but you want to get your homeowner's insurance figured out. And all you need to do is provide us the name and number of your insurance agent and company, and my team and I will take care of the rest for you, and we'll get that information done for you. Once the appraiser comes out and visits the house and he gets the appraisal done, he's going to send it over to us for re-review. Once we review it, we actually send you over a copy of the appraisal. And I actually like to make a quick little video of it, like a 2-minute long video, just kind of going through, hey, here's what the home is worth. Here's the comparables that he used, other houses that are in that neighborhood that have sold. And here's how he determined that value. Do we need any repairs done on it, et cetera, et cetera. Once that appraisal is done, we're going to be going to underwriting. Now, it's not uncommon, guys. This is very common. Don't let it freak you out. We're typically going to go to underwriting a couple of times. The best way I like to explain what underwriting is, they're like a judge. And it's like we're on trial and we're in court. Our job is to present a case that is going to prove that you're innocent, you've got no problem repaying that loan. And that's by your documentation, the documentation that we went over earlier. So it's not uncommon. Hey, we've got to keep the file fresh. So your loan processor is going to be asking you for, hey, you know what, your pay stub expired. We need an updated pay stub. We need an updated bank statement, or hey, we need a letter of explanation about this. It's all part of it, guys. Don't overthink it. Again, just surrender the process, get us back that stuff in 24 to 48 hours. It's super, super important. And that way we'll get you in for your final loan approval. Once that information has been requested of the underwriter gets back into them, they're going to review it. They review the appraisal and all updated income and asset documents that need to be reviewed by the underwriter, AKA judge. And they're going to issue what's called your final loan approval, or your clear to close. Those are the same thing, just two different names. Once you do that, you're going to get issued what's called your final closing disclosure. And here, this is the law. You get issued to that. It's very important when you get issued that you sign it right away, and it can be e-signed through the computer. This is what legally starts your 3-day clock on when you can go and sign your loan documents. Once you're signing your final loan documents, you sign them at either a title or escrow company or with an attorney, depending on what part of the United States you're at. You're actually going to wire your money to escrow, and you will wire your funds to close to escrow. And the wiring instructions are going to be found in your your pre-close review that are sent from the title and escrow company or the real estate attorney. Once you've signed all your documents, they send the documents back to our funding department. Those get reviewed, and congratulations, your loan is funded and your mortgage gets recorded. Typically, you're going to fund the same day that you sign. If you're signing later in the afternoon, it's going to be recorded the following morning. And once it's funded and recording, that's when you actually get your keys. Now, one of the big questions I get all the time is, Aaron, when's my first mortgage payment due? So once your loan funds, you're going to have 30 to 60 days before your first payment is due. For example, a loan that funds on September 18th, you're not going to have your first payment due until November 1st. If you fund and record on, say, September 2nd, you're not going to have your first payment due until November 1st. So you're actually going to get a full 2 months off of not having to make your payment. So some do's and don'ts, guys. These are super important. I can tell you right here, the majority of loans that have issues are because one of these happened. And it's just, guys, it's just basic sense. You got to think about it again. Hey, if I was lending this person hundreds of thousands of dollars, I wouldn't want them to do any of this. So the big don'ts, don't make any major purchases, guys. Don't buy cars, boats, furniture, jewelry, student loans. Don't take out any new student loans. Don't pay your student loans late. Don't apply for any new credit. Okay, please give me a call. One of the worst things I see, guys, is people are at RC Willie. They want to get all this new furniture for the house. They got all these great ideas, and the furniture salespeople tell them, "Oh, it doesn't impact you at all. Don't worry about it." Yes, it does. I promise you, you can get all that stuff after you close on it. Don't open up any new credit. Don't open up any new accounts for a gym membership, etc. All that stuff, guys, can be done literally the day after you close. We'll tell you when you can do it. Here's a big one. Don't transfer any balances between your bank accounts without letting us know first. We have to be able to track everything, guys. Any type of deposits, we have to be able to show where it came from and source it. Don't pay off any collections or accounts that are past due without consulting us first. If you're going to do that, I want you to do that way before you're even planning on buying a house. And that's something I've done in a separate video. But if you're in the process and we've got you approved with some collections, don't touch them, guys. We'll tell you exactly how to do that. Don't close any of your current credit cards accounts. Don't change banks or open up any new bank accounts. Don't max out or overcharge your credit accounts, and don't draw on an open line of credit for closing cost or down payment funds. So, guys, when in doubt, just ask questions. The number one thing I always tell people is, you're buying a house, it's more than likely going to be the biggest purchase you've ever done in your life. We treat it that way. Ask questions, guys. There's no such things as dumb questions. Okay. One of the big things that I learned that has really helped is if you start this process and you do it right, you should start preparing months in advance. Open up a separate savings account that you don't have your ATM access to, and you're putting money in that account. You can name it, whatever house buying account, savings account, and you're putting money in there for your down payment closing costs. Start doing that months in advance. Don't consolidate your debt onto other credit accounts without consulting us first. Please don't go buy a house or take out any new auto loans or leases. Don't open up a new cell phone account. Some do's. Do continue to make your mortgage or rent payment on time. Do stay current on all existing accounts, even if you're paying them off, guys. Do continue to work for the same employer. Try not to switch jobs or get fired. Two things happen right before they push the button. Every single time, guys, it's designed this way. There's no sneaking through. They're literally going to pick up the phone and do a verbal verification employment at your current job. And they're going to check your credit one last time just to make sure there's no new big accounts that have been opened or anything like that. Do continue to use the same insurance company. Do continue to live at the same residence, and do continue to use your cards as normal. So if you use a Visa card, excuse me, if you use a Visa card once a week to fill up your gas tank, continue to do that, guys. Just make sure you pay your bills on time and everything will be fine. And again, do call us if you have any questions. We try and be as thorough as possible up front, but things do pop up and we want to be here for you. And again, do tell your friends, coworkers, and families about us. We promise to take great care of you. And the only thing we ask in return for you is you introduce us to others that we can help. Again, we work on a two-way street, guys. And if you do encounter a special situation, it's best to mention us right away so we can help you determine the best way to handle it in order to achieve our financial goals. Okay, guys, so this is a great analogy that I adopted years ago. And really obtaining a home loan and buying a house is like taking an airplane ride. We know our destination, we know where we want to get to. However, we don't know what types of turbulence that we can encounter on the way. And we kind of view it as, hey, we're your pilots. We've got to kind of navigate through this stuff. And just the same way as a flight. You can have delayed flight due to weather, lost baggage, the flight gets overbooked, there's turbulence, there's storms, you got an annoying passenger, et cetera, et cetera. Obtaining a home loan is just like taking an airplane flight across the country. And when you start out your trip, you have no idea how the trip will go, neither does the pilot. And I can tell you guys right now, we're going to encounter some turbulence. It's just common. There's literally 30 to 50 different vendors, 30 to 50 different people involved in the process. We've got title escrow people, we've got underwriters, we've got processes, we've got two different real estate agents involved, we've got inspectors, we've got appraisers. I'll give you a quick example real quick. It just happened recently. We had an appraiser accept an offer for an appraisal. And literally, we're 3 weeks into this and no one's heard from the appraiser. And, I personally reach out to the guy just to, we're kind of concerned. Is he okay? Did something bad happen? Heaven forbid, did he pass away? And he literally replies back, oh, hey, I just got back from Mexico. Well, he had forgotten that he had a vacation scheduled for Mexico and he shouldn't have accepted the order. So that just gives you guys an example of some things that can happen. So the biggest thing is this, concentrate on what you can control, stay communicative with us, get us what we need in a timely manner, and everything will be fine. And here's just some examples, guys. I'm not going to go through all of these just for time issues, but it gives you an example. And this is why we like to review the loan app with you, make sure that information is correct. Late payments popping up on the credit reports, just some things like that. And it's kind of broken down between the buyers and the sellers, some third-party vendors that we have, the property, title escrow companies, the appraiser, like an example I just told you there, and then inspectors, things of that nature that we have to go through. So just remember, there's literally 30 to 50 different vendors involved during the process. It's not always a smooth process, and there are going to be some bumps that we have. But the main thing is we're getting to our destination and working through them. So understanding mortgage rates. So this is something I believe in huge transparency on. And I really think the industry does a horrible job in educating people exactly how mortgage interest rates. And they prey on that with the general public. And a lot of times what you'll see is these amazing low interest rates that the eye just gets drawn to. And that's marketing at its finest. What they're not doing though is explaining how those mortgage interest rates work and why they're important. So there's literally about 30 different factors that determine an accurate rate quote. What's the loan amount we're doing? What type of loan is it? What is the loan term? Is it a 30-year fixed, a 15-year, a 20? The purpose of it, is it a purchase or a refinance? Believe it or not, taking cash out of your property is considered more risky than paying it. What's the loan to value? Meaning, what is the percentage of the loan to what the property is worth? If you have a larger down payment, you're going to get a better mortgage interest rate. What property state it's in, the property type. Is it a condo? Is it a townhome? Is it a single family residence? How many units is it? Is it a duplex? Is it a triplex? Is it a fourplex? Are you going to live in that home, or is it an investment property or a second home? All of those things literally go into a big mixing pot and determine your overall risk factor for what interest rates are available for you. So that's the biggest thing. Just don't believe everything you see online with that. So one of the big things I like to do is actually educate all of our clients and explain to them how mortgage interest rates work. And it all starts with mortgage-backed securities and mortgage bonds on the secondary market. And it has an inverse relationship. So the higher you see these bonds trading at, that means there's more of a demand for them and there's more money available. The more money that's available, the cheaper it can be lent out. So the higher you see these go, that's actually lower interest rates that are available. And again, this just goes to show you there's literally, you have like 20, 25, maybe sometimes as much as 30 different rate options that can be available for one particular client. What we like to do is do a presentation, pick kind of the four that meets within your goals, educate you on them, and then make an educated decision with this. And again, guys, these are just for educational purposes. This is not a rate quote whatsoever. So understanding your rate lock, discount points or not. So this is just an example of kind of the four different options that we show clients. Like, hey, here's option A, here's option B, here's option C, here's option D. What is it based on depending on your overall financial goals? Are you only planning on living in this house for 3 or 4 years? Something of that nature. Those are all things that we want to discuss in our upfront meeting. So that's why it's really important to be transparent and go over that. Interest rate lock disclosure. So what is a rate lock? A rate lock is an agreement between you, the borrower, and us, the lender, that a specific interest rate will be provided to you for a specific period of time, that rate lock period. When is your rate locked? You have to get everything notified in writing and you have to acknowledge it by signing that disclosure. So this is kind of goes through real quick what your interest rate lock disclosure is and how that works. How to pay less interest over time. So this is something, again, I'm a huge advocate of teaching my clients how to build wealth through real estate. And not only that, I'm a firm believer that everyone in our country, if you do it right and you prepare yourself with proper knowledge and you educate yourself, everybody can retire as a multimillionaire in the United States. And right here, this is just a mortgage payment breakdown. This is some mortgage 101 here. What does your mortgage payment consist of? It consists of four major components: your principal, the original amount of money owed, the interest, the charge for the use, the loan of the money, taxes. These are assessed by the county. Your lender typically pays your taxes for you through what's called escrow accounts. And then your homeowner's insurance. You're going to pay 1/12 the annual premium each month. And then you also might have private mortgage insurance, depending on the loan type and also how much money you put down. So typically, if you're putting anything less than 20% down, depending on what type of loan it is, you're going to have private mortgage insurance with that loan payment. Here's some mortgage loan examples just to look at on a conventional 30-year with 20% down, and then also with 15% down. Here's an FHA 30-year fix compared to a conventional 30-year fixed with 5% down. So what are some upfront costs? These are things that a lot of times people get surprised on And another reason why I like to do this presentation is because I've seen numerous times people like, oh my God, I didn't know I had to pay an appraisal up front, or I didn't know there was an inspection up front, et cetera, et cetera. So typically, your home inspector will be required to be paid upfront out of pocket. They're a third party and they're not associated with the transaction. A good home inspection is typically going to run probably between $350 to $500, and it's going to be dependent on the property. The larger, more complex the property is, the more they're going to charge. Again, appraisers are an independent third party, and they do not work for the lender. I can't tell you how many times even real estate agents think that we have our own appraisers that work for us. They don't. They are completely separate. They are a third party, and they are performing a duty before the close of escrow, and most will require a payment upfront. This is typically going to run anywhere from $600 to $800 on average. Again, and that's going to be dependent on the property. So our core value statement of legacy. So we're a solution-driven mortgage team that is centered around three things. So my biggest thing is, if I tell you we can get you approved for a home loan, as long as you don't go and change things on how we approved you, we're going to close that loan. So that's why it's important we, again, work on a two-way street, guys, have complete transparency, lots of communication, proactive communication, that we went over with us. And we want to help you understand the importance of obtaining a comfortable mortgage payment so that you're able to save money and retire, and also be able to retire well off and enjoy life. And I don't think we were put on this earth to suffer or do hard things. I think we were put on this earth to flourish and help make it better. So our purpose is to turn our clients into advocates by providing a world-class experience before, during, and after the funding of your loan. So one of the big things that we do is, again, we want clients for life. So one of the things we do after your closing is we do a 6-month review and an annual mortgage review. We want to make sure that you're in the best mortgage for your need. If interest rates went down, we want to make sure that we're saving you money. We want to take a look at your overall debts. All those things are very, very important. So guys, thank you so much for watching. Again, nothing to buy here. I just wanted to make this presentation because I find that with more education and more preparation that's shared up front, the better you can prepare to be when you're buying a home and going through the home loan experience. Hey, everybody, thanks for watching. Have a great day, and we'll talk to you soon. Bye-bye.